Thank you very much. I stood up here 12 months ago and I told you what we were planning to do, and I'm pleased to say that we've achieved everything we targeted, and we delivered our first project on time and within budget. And what I'd like to explain later today is our Stage 2 project and how we intend to deliver value by delivering that. We're listed on the ASX. Our market capitalisation is $90 million and we're well funded. We've got $13 million of cash and we've got positive cash flow coming from our first stage project. Importantly, the founders and directors of the company are significant shareholders, and because of that, we're very, very focused on cutting costs and driving value in the business to drive the share price. We've been listed now for just coming up 3 years. In terms of the last 12 months, when I stood here a year ago, we were trading at 20 cents. We've been as high as 42, we're currently 29. And I think this year is all about delivering Stage 2. And by doing so, we believe we're at the start of the journey and have the potential to significantly drive value from this point forward. Our business is all about renewable energy generation and energy storage, and we're developing one site in North Queensland in 3 stages. The first stage is a 50 megawatt solar farm. That was the project we built last year on time and under budget, and that's now generating cash flow for the business. That project's benefited by a long-term contract with the Queensland Government, which underpins the cash flows for the next 20 years. Our second stage is shovel ready. It's a large project. It's an integrated pump storage hydro project with more solar. I'll explain later what pump storage hydro is, but in essence, it's a giant water battery, a very efficient way to store energy on a grid scale. Our third project is a wind project. It's about 10 kilometres from our main site, and that project's going through the feasibility and has the potential to deliver the holy grail of renewables, which is the integration of wind, solar and hydro to deliver baseload renewables into the grid. In terms of our location, we're in North Queensland. This particular site was chosen because it was once a very large gold mine, and what we sought to do was leverage all of the infrastructure left behind from that gold mine and use it for renewable energy. But in doing so, build these projects at a fraction of the cost they would otherwise cost to build. So the location you can see is blessed by a stunning solar resource, in fact the best in the country of any project that's connected to the grid via transmission. But the mine that was left behind has gifted us a transmission line, a substation, a fully permitted site, a workers' accommodation camp and airstrip, and 2 enormous holes in the ground, which is very handy for our hydro project. So the combination of those assets which we acquired for $1 have the potential to save $500 million in capital cost, and we expect part of that value to flow through to shareholders over time as we realise this project. This is a little mud map of what we're building. The little triangle there is actually 200 hectares. It's our Stage 1 solar farm that was built on the tailings storage facility that's now operating, and has proven that this site is ideal for the production of renewable energy. Our Stage 2 project is the hydro, which is these 2 enormous mine pits, integrated with a massive solar farm, which is 4 kilometres by 3 kilometres when built. So that truly is a massive solar farm that will drive the power we need for the hydro to make the dispatchable reliable energy. There's some very fundamental changes happening in the electricity market in this country, which I think underpin why we believe this project has a fundamental advantage, which is likely to be with it for many, many decades to come. What we're seeing around the world and in this country is the massive take-up of wind and solar. Now that can be on someone's roof or on large-scale applications, but what's happening is that that is now coming into the grid in the form of wind or solar, which obviously is intermittent energy, can't be relied upon because it depends on the sun shining or the wind blowing. So what the market is now crying out for is low-cost energy storage. Of course, there's many ways to store energy, but the lowest cost, the most mature technology for grid-scale energy storage is pump storage hydro. The Snowy 2.0 is a very good example, and what we're doing in Queensland is another example of a shovel-ready project. The driver of this, of course, is the massive decline in costs for wind and solar. So 3 or 4 years ago, wind projects and solar projects required subsidies to be economic. That is no longer the case. New build solar and wind is competitive with gas and coal to build, but the advantage, of course, is once these projects are built, there's no cost for the sun or for the wind. So our fuel cost is zero, and therefore they have a long-term competitive advantage in the grid. This, of course, is happening all around the world, and for example, in Europe, you've got high degrees of renewable energy penetration. In some countries, like Germany, around 30%, but in other countries as high as 50 and 60%. And the way that is managed, the way they control the intermittency or the unreliable of renewable energy in Europe is that they have co-located large pump storage hydro projects throughout Europe, so that if the wind's not blowing, the sun's not shining, those hydro units can generate to dispatch power into the grid. There's nothing new about pump storage hydro. It's been around for 100 years, and there's more than 1,000 of these plants operating in the world. There's 3 that currently exist in this country, Snowy 2.0, there's Wivenhoe near Brisbane, and Origin Energy own the Shoalhaven asset near Sydney. So our project will be the 4th pump storage in Australia, and it'll be the 3rd largest. So we view it as a strategic asset, which is well placed to benefit from the changes in the electricity industry. And this is a little graphic that illustrates how dominant pump storage is in terms of energy storage relative to other technologies such as batteries and the like. But anyway, moving on to what we've delivered, our stage 1 solar farm is now in operations. It's 50 megawatts in size, and that project was completed on time and on budget last year. It comprises more than 500,000 solar panels mounted on a tracking system, so the panels follow the sun from the morning through to the afternoon, and in doing so, we generate consistent, reliable power into the grid, and that energy is backed by a Queensland Government guarantee, which lasts for the next 20 years. When we were planning this project, we wanted to have a low-cost project development, so we deliberately went with Tier 1 panel suppliers, Tier 1 inverters. So those suppliers came from Germany in the case of the inverters, or America in the case of the panels, and we did so because we wanted to have reputable companies with long track records, essentially the blue chip companies in their field, so that we had warranties that underpin the reliable performance of this project for at least the next 10 years. In terms of revenue, these numbers will be too small for you to see, I imagine, but we started generating in December last year, generated just under $500,000. We're now ramping this project up to the point where it generates $1.6 million of revenue per month. And of course, with a solar farm, the operating costs are very, very low. So the vast majority of that $1.6 million every month drops to the bottom line before obviously servicing interest costs and debt costs. Now let me talk to you about our pump storage hydro project. I explained it's a giant water battery. It's nothing more than a giant water battery, but this video will help explain what we're planning to do.
The Kidston Pumped Storage Hydro Project, K2H, utilises an abandoned gold mine which was filled with water during rehabilitation. By building an underground tunnel and reversible turbine generator system, the 2 pits will act as the upper and lower reservoirs. K2H will be co-located with a 270 megawatt solar project, K2S. During the day, electricity generated from K2S will pump water from the lower to the upper reservoir. During the morning and evening peak periods, water will be released from the upper to the lower reservoir, generating dispatchable electricity. Each evening, grid power will also be used to pump the water into the upper reservoir. This process can be repeated each day, storing electricity in order to dispatch during peak demand periods.
Okay, so the technology's been around for more than 100 years. There's a clear requirement to build more low-cost energy storage in the Australian market. Our project is now shovel-ready. So we completed the feasibility study last year. We're now at the point where we're finalising the contracts with the builders and we're finalising the funding arrangements. So we believe this is a very, very exciting time for the company, and by getting this project financed and with construction commencing next year, we believe that's the strong potential to have the shares in the company substantially re-rated. Just like with the solar farm, we've deliberately decided to go with tier one builders and suppliers. So we've gone with a major European turbine supplier. We've also gone with two major Australian construction companies. Each of those companies will provide us with a fixed price contract so that they will be responsible for any cost overruns, and we as Genex shareholders will not have to put a hand in our pocket to fund any time delays or cost overruns. I did allude in that video that this project is integrated with an expanded solar farm. We've received approval from the government to develop a further 270 megawatts. Essentially, it's exactly the same as what we built on stage one. It's more of the same. We're going to use the same panels and the same builder, and that project is also slated for funding later this year with construction to commence next year. Whenever we finance these projects, we seek to enter into long-term revenue offtake arrangements. So what we're negotiating now is a long-term contract with a major energy utility, which will guarantee the revenues to the company over the next 10 or so years. We'd expect to finalise an arrangement like that in the next couple of months, and that will be the key contract which underpins our finance and most likely going to be a key driver to our share price going forward. We're also lucky that this particular part in Queensland has a very good wind resource, and about 10 kilometres from our site we've secured a 21-kilometre ridge line which we're currently testing for the suitability to develop a wind farm. And if that wind resource proves up, and the anecdotal evidence is extremely strong that it will do so, we will achieve the holy grail of renewables, which is the integration of three technologies being wind energy, solar energy and hydro. And of course, if the wind's not blowing, the sun may be shining, but if the sun's not shining and the wind's not blowing, we can utilise the hydro pump storage asset to generate, and in doing so we can generate 24/7 renewable energy. And in doing so, that achieves the holy grail of renewables in this country, which is why the government has been very keen to fund this. So the government, both in Queensland and Canberra, have been working with us to accelerate the development of this project. But before I talk about that, the timelines are something which I'm very, very focused on. I'm conscious that if we're to make money for shareholders, we need to deliver projects on time and within budget. We did that for stage one. The 50 megawatt solar farm will have an economic life of 30 years, and that's now proving its weight in gold in terms of generating cash flows to the company. Stage two is all about getting funded this calendar year. There's some major milestones to be achieved to do so, but we're planning to commence construction early next year. So the solar part of that has an 18-month build, and the hydro component of that has a 3-year build. And PowerLink will be building a new transmission line to facilitate the export of the energy from those two projects. The wind project is further down the track. There's at least 18 months of feasibility before we're ready to think about investing into that project. I did briefly touch on the government support. Back in the days when subsidies were required, we were lucky to benefit from some grants from the federal government. With the costs of renewables coming down, we don't need any more subsidies. But having said that, ARENA and the Clean Energy Finance Corporation, two government bodies, continue to be very, very engaged in this business, and they're very keen for this project to be developed. So our board, we've got a very strong board. Our chairman is also the chairman of the largest electricity generator in Queensland, and our recently appointed non-executive director, Teresa Dyson, is on the board of the largest Queensland energy retailer. So we have a very strong presence in this state. We've got a very strong management team that are delivering these projects, and the two founders, Michael Edison and myself, have significant skin in the game, and we're absolutely committed to delivering this project for our shareholders. Thank you very much.